In the meantime, the coronavirus continues to dominate headlines as well as the markets. In fact, take a look at shares of Regeneron. The company requested for emergency use approval for its antibody treatment. So is the potential for a therapeutic a good enough signal for investors to jump into the broader markets right now? And if so, what should you be buying? Joining us right now to talk about this is Greg Branch. He's a partner at 1847 Financial. Also, Sarah Ketterer, who's the CEO and portfolio manager at Causeway Capital Management. And welcome to both of you. Greg, why don't we start with you? I know you look at this as kind of buckets of stocks, things that are buckets 1, 2, and 3. What do you put in those buckets, and which ones would be something that you would actually dabble in right now?
Right. So when we're talking about the general market, the bucket that I'm most attracted to are stocks that are poised for significant growth in 2021, provided we have a vaccine and therapeutic treatments. Stocks that not only exhibit triple-digit earnings growth next year, but also are attractive on valuation relative to the market and their own history. And in fact, you can get this with a healthy dividend in some cases. And so for those sectors, I'd be looking at financials, which are trading at a discount on price to tangible book to their history. I'd be looking at certain segments of consumer discretionary, gaming, for example, where the names that are levered to Asia are going to swing from a negative this year to over $3 in profit and a dividend of $3 or more next year. So I do think that there are some opportune areas as we look for a rebound in the economy, again, provided we're going to have a vaccine in the first quarter and return to some semblance of normalcy next year.
Hey, Sarah, when I think about what to be buying, I know that you've looked at some of the things that have been undervalued. If you're watching just the general markets, we are talking about the Dow less than 5% from its all-time high. You've looked at new highs that have been set by the S&P 500 and the NASDAQ multiple times this year. But that really doesn't tell the overall story of the markets. If you were looking at the S&P 500, those FANG stocks, they're up about 40% or almost 40% for the year. If you look at 490 of the other stocks in the S&P 500, they're only up by about 1%. So when you start digging through this, what is it that you like? What would you be attracted to? And is this a buying signal now?
That market concentration is very specific to the U.S. market and, interestingly, to the emerging markets where some Chinese internet stocks have really dominated performance. Outside the U.S., however, there are many opportunities and markets are much less crowded. So it's not just a stock-specific recommendation, but we think of this as very geographic. We're globally really interested in Europe, for example. There are a number of companies listed there that have hardly moved. In fact, there are many that are down double-digit percentage teens year to date, which for the U.S. investor, sounds shockingly awful. But these stocks are very representative of what happens in the world of cyclicality when the market anticipates recession. But we're now moving with vaccines in the first half of next year and an end to this pandemic. We're moving into an environment where both consumers and businesses will be much more confident. And as a result, the market will begin to anticipate recovery. And the stocks that are most geared to that are definitely in the cyclical category, such as financials, industrials, consumer discretionary. And this is true globally.
Hey, Greg, you just made a comment, and I hope I heard it right, that you said assuming that there's a vaccine in the first quarter of next year. Is that your assumption, and do you think that's a reasonable assumption? And when you say that, does that mean that there's a vaccine as in one is approved, or is that an assumption that you believe one is at scale? Because I think the new conventional wisdom is that maybe something happens in the first or second quarter in terms of approval, but in terms of scale, unfortunately, I think we're now talking about next summer, and some people are even talking about next fall.
Look, and that's a great distinction. From the vaccine perspective, we'll likely be capacity constrained next year, even if we start ramping up in the first quarter. So that's where the therapeutics come into play as well. And as long as we have therapeutic treatments, which don't provide for long-lasting immunity, but does, in fact, treat and decrease the symptoms, and as long as we have a vaccine that is available, regardless of whether or not we have the quantities necessary to bring herd immunity about, it still provides a signal to the economy. It still provides a signal to the markets that we are headed in a trajectory towards normalcy, that we are headed in a trajectory where we will no longer have 30 million people receiving some form of an employment benefit, be that state or federal. And so I'm not sure that we have to achieve that as much as we have to signal to the market that we're on that path.
But Greg, the piece that I don't understand about that is even if you announce that some vaccine or even the therapeutics are approved in the first quarter, if they're not really available until, let's say, next summer or fall, and God hope us that this happens sooner, it's not that restaurants are somehow going to be able to go from 50% or 25% capacity to 100% capacity. You're going to be waiting those 6 or 8 months. And during that period, some of those businesses are still going to struggle to even stay in business.
That's a very fair point. But what we've noticed over the last 6 months is that there can be a departure between what's happening in the economy and what's happening in the market. And so while I agree with you that it doesn't necessarily mean that restaurants and hotels will be full capacity, it will send a very powerful signal to the market that it's safe to engage, it's safe to start looking at things again because we're on a pathway and we're merely capacity constrained. But once we have something that works, we know we're on that pathway.
Yeah, Sarah, markets are forward-looking. Can you tell us more specifically about some of the stocks that you were mentioning in Europe that you think are so undervalued now that will be the ones that take off?
Well, most hard hit in the pandemic have been the aviation and aerospace stocks. That sends shudders down the spine of most people. But think about it. You could get Boeing's main competitor, Airbus, for one of the lowest valuations we've seen in a decade at least. And now Airbus is the world's largest commercial aircraft manufacturer. They're a duopoly. There's just 2 of them. And until we find some other way to transport ourselves, which I'm sure is coming, but no time soon, this is a very attractive business. Also, in the industrial category, you'll find Siemens in Europe having recently spun off their energy business, extremely well managed and intent on improving returns for shareholders. And then if you want very deeply undervalued, look at the banks. I've been talking about them on your show for at least a year, and they get cheaper and cheaper, trade below where they did in the global financial crisis, and yet have 3 times the level of capital. One of them, or at least 2 of them, trade for the level of their surplus capital. You get the bank for free. And maybe this isn't fun to talk about, but the undervaluation is so compelling, it just has to get better. And we think that, and I agree with Gregory, the therapies will be a bridge to vaccines, and we have so many different technology platforms for vaccines that increases the likelihood of one or more of them being very successful.
Sarah and Greg, I want to thank you for your time today. It's good to see both of you.